Hello and happy Friday. I'm Zach Seward. This is The Hash. I am joined by the whole gang. We got Naomi Brockwell, we got Will Foxley, Jen Sanasi, and Ben Powers. Quick price update in the Bitcoin market. We are through a 3-month high. Bitcoin over 48.5. Interesting to see that number go up. More on that later in the show, but let's get straight to it. Ben, you are leading us off today. I love the Friday shirt. Tell us your story.
Thank you.
Oh, yeah.
There's a story behind it, but we don't have a segment for that. Anyway, so China is actually set to enact a sweeping national privacy law starting November 1st. Now, this law is one of the strictest in the world, actually, and closely resembles in a lot of ways Europe's GDPR, which is the first sort of general data protection regulation of its kind. Importantly, though, there is less scrutiny on the government in terms of its data collection and a lot of scrutiny on companies in terms of minimizing the amount of data they collect on customers, as well as obtaining prior consent for that data. Naomi, I'm tossing this one straight to you and we can unpack this further.
For sure. So it's a very interesting story because if you look at how the US collects data, it actually collects it through these big tech companies, right? You have programs like the PRISM program where they have direct access to the servers of places like, Microsoft and Yahoo and Google and all of these companies. And so the government is never going to implement those kinds of controls in the US. They want that data. Even when Zoom came out and you found out it wasn't really end-to-end encrypted and the government was like, we're going to reprimand you, they never said you need to actually implement this end-to-end encryption because they don't want them to. They wanted them, to keep this stuff open so they continue to get access to all of this stuff. And it's interesting because in China, it's a very different situation. It is absolutely, there's nothing tying their hands. In the US, we kind of have these vague things in the Constitution that the government's like, yeah, we're totally abiding by that. But really, they're just going through all these loopholes and doing what they want and often violating the Constitution as well, as courts have found since the Snowden revelations. But in China, you've got nothing like that. And so the government doesn't care if they have a monopoly on data collection. They can outright collect as much data as they want. There's no uproar. There's nothing tying their hands. There's no pushback at all from citizens there. And so what you've got now, some people are like, well, data protection, this is great. This is kind of mimicking what the EU has. And it's not at all. All they're doing is just having a monopoly on the collection of information. And it's kind of a worse situation because instead of private companies being able to, benefit from this or see what's going on or having any sort of, clarity into all kinds of data. Instead, the government has a monopoly on all of this. And I think that this is all just a continuation of what we've seen with the Chinese government cracking down on IPOs on American stock markets, because their main concern when that happened was that if these companies IPO'd on New York Stock Exchange, then American companies or the American government in particular would get access to this data from these Chinese companies, and the government didn't want this. And so now it seems that they're curtailing the data collection of the companies themselves. Meanwhile, the Chinese government is allowed to collect as much as it wants. So interesting story, not good for the citizens of China at all. Obviously, privacy laws are great, and I actually like what the EU has put in place there. But it's just not what we have in the situation that's going on in China. But Zach, I think I saw your hand go up.
No, I think Jen beat me to it, and I think Ben also wanted in. So Jen,
I think we all put our hand up.
I saw someone's hand. I was just like,
I was just fidgeting. Somewhere. I was just fidgeting around. Anyway.
I was just going to say, this is just another notch in the tech crackdown happening in China. I was at PwC in Shanghai 2 to 3 years ago now, and we were talking about the shopping experience in China. And when I read this story, it made me think about that. So we were talking about an experience that they were testing out 2 to 3 years ago where you would walk into the store, you'd be recognized by your WeChat ID, you'd immediately get served personalized ads on the billboards that are in that store. Those billboards would direct you then to clothes that you would like depending on your online activity. You would go to that section, your size would be identified for you. If you wanted those items, you would take them and leave the store, and the money would come out of your WeChat wallet. So when I read this story, I think about the huge implication that this is going to have to tech giants in China. And it just points to the government really using different narratives to crack down on big tech in China. And it is scary. I don't know what's going to happen next, but I will pass it off to you, Ben, and then to Will.
Yeah, I think it's interesting. I think we can kind of hit the privacy aspect of this and the data security aspect of it a little bit ad nauseum. But to me, maybe what stuck out here is the fact of, not only, and maybe it is that bigger like tech crackdown and the damage that's being done to these companies in a lot of ways to try and rein them back in. These are some of the more valuable companies in the world, right? Like Alibaba, other ones. And they're like, multi-million-dollar corporations. And data is a huge part of that. And to me, like, we've seen the stocks take a little bit of a tumble as China's continues to crack down. This is just going to be another step of that. And I do think also it's going to be interesting and hurt companies further as they work to kind of build out compliance with this law, right? And one of the analysts in the piece said that, if companies are in compliance with GDPR, they really shouldn't have a problem being in compliance with this one. But I think it is just having to build out more and more infrastructure and further going to, hurt the value of these companies. And looking at China as the second largest economy in the world, this could have implications for that too, right? These things have ripple effects that, could affect geopolitical instances. And there's also a national security provision here that is going to further complicate, data being moved offshore and scrutinized in a variety of ways. But Will, I'll toss to you.
No, I think you guys kind of hit the nail on the head all around here. Like, China's cracking down on tech stocks, and then messaging itself is just being cracked down on. Government has the ability to surveil all this, and tech companies, they're just giving all that data over to China anyways. But I'm going to throw it up to you, Naomi, for better insights than I have on this topic.
Yeah, I'll just mention that with GDPR, why I'm not 100% on board with it, even though I like the idea of protection of privacy, is that when it comes down to enforcement of this, it's completely arbitrary. GDPR is so comprehensive and it's so difficult to figure out whether companies are actually complying or whether they're not. So when it comes to actually, navigating this world and figuring out, are these companies doing what they're meant to? The enforcement is arbitrary. The government is picking winners and losers. And so it ends up just being a landscape that's very uneven, where the government can choose, okay, we're going to crack down on you and make sure you're enforcing, but we're not going to look into this other company there. So that's why I don't like laws like this, because enforcement is so difficult and it just makes things more unequal for companies. But, in this situation, government in China is like, no, blanket rule, none of you, and we're the only ones who can collect data. Not a good situation. But let's change track here. I want to talk about what's going on with Binance at the moment. Some big news. So CZ actually just tweeted out on his account, he said, mandatory KYC for all services. Actions speak louder than words. So Binance, new customers will have to supply a government ID and pass facial verification to meet Binance's intermediate verification status. They're completely cracking down. This is the end of an era. Binance, which has been that free place where everyone around the world goes to and they can trade freely whatever they want, and now they're enforcing mandatory KYC across the board. And it's like interesting, you can draw analogies with companies like Shapeshift. When they had to enforce KYC, they lost 90% of their business. So I'm not sure what's going to happen to Binance at this stage. And they're saying, oh, well, we're complying, we're protecting consumers, yada, yada. I don't know. I don't think consumers are being protected. I think they're just being, their choices are being curtailed here. And, other big news, big New York Times story came out that kind of digs into the fact that Brian Brooks left and the reasons around that and the control that CZ still has of all organizations, whether they're just, affiliates like Binance US or Binance itself. But I'm going to throw to the group. Zach, I saw your hand go up. Let's just dive into these two stories.
Yeah, putting the New York Times thing to the side for now, I think the KYC thing here is really the big story. This is a major move by Binance and trying to signal to all these regulators who are knocking down their door that they're taking this stuff seriously. CZ did not mince words in his tweet, and he is looking to demonstrate that, hey, we're playing by the rules now. But I will note, you mentioned Shapeshift. I think it's a really good comparable. I think this happened with BitMEX as well. BitMEX was under the eye of global regulators. They were long time resistant to the KYC process. And then they said, hey, we're rolling out KYC, we're going above board. And that did not stop the enforcement action that was served against them and their executives some months later. So if that's the playbook here, the intrigue around what happens next with Binance as it relates to U.S. authorities has certainly been turned up a notch. That's entirely to be determined. But to me, that was the first thing that jumped out in this story. It's like, hey, wait a minute, this is deja vu. I remember this happened to BitMEX. And then sure enough, the crypto cops came knocking despite it all. So going to be really interesting to see what happens. But I think this is a really big story. And Naomi, you're right, sort of an end of an era for Binance here.
Absolutely. And I'll add to that with the Shapeshift analogy, I mean, the route that Shapeshift went down is they've decided to completely decentralize. They're getting rid of their headquarters. It's what Binance kind of tried to do with their whole, we're everywhere in the world, we're not headquartered anywhere. But Shapeshift ended up having to say, okay, we're actually going to dissolve the company. And that's why they're using things like Thorchain on the back end now, decentralized exchanges. It really does show what a need we have for decentralized exchanges. And I think it's going to really push things forward. With the sorry, I lost my train of thought there. But let's move to the Brian Quinted's quote here that's on the screen. So it is very interesting if we're going the DeFi route, knowing what Gary Gensler just said this week, where he said, listen, we're cracking down on DeFi as well. You guys are not safe. And Brian Quintez brought up a great point. He said, from my experience, fraud usually involves a level of centralization and control as well as opacity. Query if those two conditions exist in a true full DeFi system. If not, how does the idea of investor protection change or shift from the government's to a participant's prerogative? So just such a great point there that, like, who's the SEC think that they're protecting people from if we do have truly open systems? Is it just about power? Are they just cracking down on companies because they don't like losing control? But Zach, I'll throw back to you for that.
Yeah, I think that bringing that up is very apt. And I think something that I'm certainly very interested in over these next few months is this idea of an escape to decentralization. Shapeshift was merely a bellwether for what's going to happen in the space as people get concerned about the regulatory crackdown that may or may not be impending. Sources I talk to say, hey, this is animating a lot of the decisions to move projects to a DAO structure. If we sort of obviate the need for this centralized point of failure and scrutiny, and we say, hey, this is run by the community now, there's some hope that might get projects out of this hot water that may indeed be coming for them. And I think, Binance, to their credit, may have been ahead of this, right? They set up Binance Smart Chain. We've heard comments from CZ in the past saying, hey, even if I step down as CEO, I'll still be involved in the community. It'll be a community-run project, but I'll be involved in it as any other community member would, even though my bags would probably be much larger than most other members of said community. And I think you're going to see that from a bunch of projects going forward. And it's going to be really interesting to watch if a regulatory rethink is out there or if some of these old frameworks will be applied. Ben, I think I saw your hand, or maybe it was Will's, so you guys duke it out, and I'm curious for both your takes.
No, I think this is also going to be a really interesting flashpoint in terms of what the actual appetite is for things like DEXs and DAOs and stuff like that, right? Like, we're going to see who's going to be, what customer base and what level of that is just going to kind of stay where they are. We talked about the stickiness of Binance before. We talked about the appeal of centralized exchanges for a certain group of people. And so if we start to see large numbers of people migrate, I think that could be really, really interesting. But there is also a world where people are just like, crap, well, okay, here's my ID, and then there is a smaller core of like hardcore interested individuals that go to DEXs. But, the same way we talk about like why there's not a whole lot of popularity around decentralized social media, for example, and why people continue to stay on Facebook to the levels they are, I think this could be a really interesting maybe analogy to that, being more illuminating than some marketing might actually be purporting.
Yeah, Will, you jump in, and then I want to just add a note on that.
Yeah, I guess like last thought, just for myself, I'm wondering about FTX in this situation, seeing as they are just a huge player in the space, and that they kind of also did this FTX US brand and then FTX global brand. And I'm not sure if the FTX global brand has KYC or not. I'm not very familiar with their platform, but it is interesting to note that they also moved in this space right when all this regulatory action's happening. Zach, you brought up BitMEX. Arthur Hayes had to surrender to US authorities. Are we living in a world where CZ is not going to be welcome into the US anymore just because of how Binance operates? It's like an interesting question and like an unfortunate question also.
Yeah, I was just going to add in there when you're talking about decentralized social media platforms and whether people are going to flock to DEXs, I think it's a slightly different situation because that need for privacy isn't really inherent in these social media platforms, whereas in exchanges, a lot of people really want to keep their money private. It's a slightly different issue. And one thing I would say is that is similar between them is that network effect. People don't go to the social media platforms because they don't have that network effect. DEXs traditionally have not had that liquidity. And so it's been really difficult to trade, especially move large amounts. But But the difference is that now we have, instead of trading pairs, instead of someone on the other side of an order book, you have liquidity pools, which has completely changed the game. Ever since Uniswap, kind of ran with this idea that Bancor kind of came up with, it's really changed the game with DEXs, and now you have just giant amounts of liquidity there, which are being tapped by increasing numbers of people. So very interesting to keep an eye on this. But Zach, what's coming up after the break?
Well said. Good discussion. That was a good one. We're going to take a quick break. When we get back, we're going to talk about Tops. They were going to go public. It was going to be great. They had an NFT play, but that fell through. Stick with us. We'll take a quick break, and then we'll go to the world of CoinDesk Sports Desk. Thanks so much.
And welcome back to The Hash. So we're talking about Naomi's favorite topic, which is crypto payments. We're talking about mortgages.
Naomi loves crypto payments.
She does. So U.S. mortgage lender, UWM, plans to accept Bitcoin payments. They're one of the largest mortgage brokers in the world, as I understand it. And yeah, they're looking at accepting Bitcoin for payments, according to the Detroit Free Press. So pretty big story in terms of Bitcoin adoption. And this kind of makes sense that you'd be able to pay for something larger like a mortgage in something like Bitcoin, which is a little bit bigger market cap than something like Dogecoin. So interesting to see that happen. But Naomi, you're pretty hype on the story, so I want to throw it to you.
I am pretty hyped. I think this is awesome. And also because mortgages really, that's a big area where people want to spend their crypto. A lot of friends, they're kind of cashing out crypto because they want to buy a house. And it's kind of this cumbersome process where they have to prove that they have funds. It's how do you prove it? Well, you've got to sign a key, sign a message with your private key. And it's like this difficult area that we're still trying to navigate. Now we've had, crypto collateralized loans for mortgages for a long time in the crypto space. But this is kind of the next step, is these mortgage companies actually accepting things like Bitcoin right off the bat. And generally, I would not say that Bitcoin is useful for payments. But in this situation, it absolutely is. When you're dealing with large amounts for houses, this is precisely the kind of use case that I think Bitcoin is good for in terms of payments. So I think this is really exciting. I think that I'd be interested to see how much use this gets from crypto people who otherwise might be, going out some sort of roundabout route in order to get a mortgage. A lot of people, paying it just outright in cash because they can't get a mortgage, and they're just cashing in all their crypto in order to do that. And so this kind of alleviates a lot of that pressure on them to get out of their crypto, which is kind of cool. But Jen, I'll throw it to you. What are your thoughts on this step?
Yeah, I think it's really exciting. And to your point, Naomi, I also have a lot of friends who face that dilemma when they go to buy a house. It's like, do I cash out my crypto? How do I prove that I have this money? There's this big conundrum for people who operate in the crypto space. So it's exciting, but I immediately think about the tax implications and the regulatory implications. If people start doing this, I think that regulators are going to come over and start looking at this, and I just don't know how the IRS is going to think about it. But Naomi, maybe you have more thoughts. I saw your hand go up.
Yeah, for sure. I mean, people have started to talk about this. It's fascinating to me, as if they're holding crypto and never, ever going to touch it. So, what's it good for? What's it good for if it's just sitting there and you're never going to touch it? Of course, you're eventually going to spend this money. Well, people hold this because they're like, well, one day there's a rainy day, right? One day we might have economic collapse, or I might need this funds. And a lot of people don't realize that maybe that day is here. Maybe that day when we have all of our funds monitored, when it's completely controlled, when you have to ask permission to get your own money, when all of the savings you have in fiat are being inflated away, maybe today is the day when you can start using that crypto. So yes, people are going to use this, but also keep in mind that, these people bought into crypto at a lower price, presumably, and they're only paying capital gains on the increase. So they're still, making a lot of money on their increase. I don't think that taxes are a big, it's not a showstopper for people sending crypto. And if they're selling at a loss, great. That's they can actually deduct that from their taxes. I think people use taxes as this boogeyman that they talk about. It's really not a showstopper from my experience. But let's change track here and talk about what's going on with this collapsed merger. Zach.
SPAC fail 101. You see a lot of news on SPACs. You don't see a ton of SPAC fails. So let's just talk about the SPAC fail here. So Topps, which is a storied producer of Major League Baseball cards, was going to go public in a SPAC deal. Didn't work out. But the thing that we're interested in noting is that they have been a bit more active in the NFT space as they try to figure out what the brand looks like in the 21st century when instead of holding a physical baseball card, you can hold it and flip it on your phone. So that's why we're talking about this Topps deal falling through. Kind of interesting that they appear to have gone with Fanatics, which is a big brand that may be a bit more crypto savvy not crypto savvy, technically savvy. So interesting to see this fall through. And I think just all that touches NFTs is not gold. And I think this is a key example of that. I'm going to toss this to Naomi. No, I'm not going to toss to Naomi. I'm going to toss this to Will. I mean, when you see this, what bearing does this have on NFT discussions or the world of business more broadly?
The world of business, big question. SPACs in general, obviously quite hot the last year and a half, 2 years now. A lot of public companies looking, or a lot of private firms looking to go public, and this is like the easiest way to do that. You don't have to go through a lot of the regulatory hurdles. And then just for Topps itself, there's so much interest in sports and then sports memorabilia, sports trading. Anything to do with sports really has really just taken off over the pandemic. I think as people are locked inside, became really interested in things like this. So it wasn't only just like NFTs, it's also like physical cards have done extremely well this past year and a half, 2 years. Know a lot of people who have gotten into that game who had never been interested in it before. I don't know why it took off again. Bummer, I guess, to see it fail, but I guess it's kind of evolution of how these things work. Ben, I'm going to throw it over to you.
Yeah, I was just looking at some data, and according to Renaissance Capital, since 2013, only about a third of SPACs have been fully successful in taking company public. So, like, SPAC splats are actually probably more common than we might initially think, even though they have risen in popularity. I think this does have really big implications for their NFT game, though. Like, obviously, we talked about IP in relation to NFTs and who has the copyright and all these other things that go on with it. So, if they lost their MLB trading card deal and these players, with the union and the league, like sign over their rights or license their rights to various people in terms of representing them for merch, for other stuff, like that's a really big deal. And actually is maybe a bigger deal than the SPAC falling through is like, how does Topps go forward from here, at least in the realm of baseball? Because they do have other sports they're involved with, but this is like a really big question in the world of sports more generally.
Yeah, it's interesting to see that, MLB and MLB Players Association have people knocking down their doors to grant them these licenses. I think the one that stands out to me was FTX, right? They signed an ad patch deal with MLB umpires, and they alluded to the fact that certain experiences and whatchamacallits would be like licensed by MLB, MLBPA, and FTX going forward. We've already seen a big Bitcoin giveaway advertised as a part of that partnership, and it wouldn't be too surprising if there was some collectibles tie there as well. So the idea that now these sports leagues and these players associations are in the driver's seat as opposed to just re-upping the contracts that they've had for the past 6 decades is really interesting and speaks to the competition that's in this market right now as collectibles, both digital and physical, super heat up. Jen, so I saw your hand up.
Yeah, just before we move on to the next sports story, I was just going to say this is really sad. This company's almost 100 years old. They really tried to pivot and make it happen, and I'm sad for them. Hopefully they can turn it around. Let's see. Maybe, I don't know what they'll come up with next, but hopefully they stick around.
This is business, Jen. This is business. Don't make it emotional.
I love your emotional take as this is a person. They're doing fine.
Should we have Jen's emotional breakdowns? We can just have a compilation of them.
Over a baseball card company. We never would have seen that one coming.
Jen's emotional breakdowns. All right. Okay, we're moving from baseball to basketball. Top NBA draft pick CADE Cunningham has signed a sponsorship with BLOCKFI that will see him receive his signing bonus in Bitcoin. The multi-year deal involves a collaboration with the sports star on educational and promotional videos. Now, I am all for well-known celebrities and athletes getting on board and doing these educational videos if they are actually interested in the space and they are educating themselves. And the fact that he's taking his signing bonus in Bitcoin tells me that he is interested in the space. I think Will just say that, he likes money. So I'm going to pass this down to you, Will. What do you think of this? I think it's great.
Was that a Zach Vol sighting?
That was a rare Zach Vol sighting.
Wow.
For those who know who that
so
is.
many things happen in your background, Will. I think that should be another segment. What's happening at Will's house?
There's a lot going on here.
Spotted. Amazing. Okay.
Wow. Okay. Who is asking the question and who is answering it?
I was answering it, Will. You're answering it.
I'm answering it.
What do you think of this BlockFi
Bitcoin
partnership?
And Sports
Athletes
Desk.
and education. Let's hear it.
Athletes. Okay. No, I'm with you on that. I think they should be educating themselves. I think it's just natural. Like there's a lot of money in the space. And when these stars are coming out, they're getting nice paychecks. If it's in Bitcoin, it's pretty trendy right now. And so they want to sign into this stuff. I met and was talking with Russell Kung, who was one of the first people to get into this Bitcoin as a payment option for contracts. And he was talking about that as well. Like there's a huge interest from the sports community about educating themselves financially. Like historically, they haven't had that ability. They've had people work on their contracts for them. And then those people often can take money away from them, or they don't make as much money over the lifetime of their career. And, you end up broke, or you don't get as much as you're supposed to from whatever work you're putting in. And that's tragic and frustrating for those players. But Bitcoin is not only a means of learning about cryptocurrency, but also a means of learning about financial assets in general. So big to see this trend continuing. Not super shocking to me. Throw it to you, Ben, or maybe Zach.
Yeah,
I don't know whose hand was up.
It was me. No, but cool. I think what's interesting here, kind of reading, I'm just letting you know while I talk. The interesting here is reading between the tea leaves a little bit for me. Obviously, BlockFi has had a rash of regulatory scrutiny from a variety of different states looking at its kind of, savings plan that offers, a higher AYP. And I think that this kind of shows that they're not potentially too worried about that. They're kind of proceeding with business as usual. They're still trying to raise the profile of, their own offerings in the company itself in terms of who's going to have access to it. So to me, this says that they're not so concerned about that regulatory scrutiny because they still want more people coming on, even as some states have sort of frozen people opening new savings accounts with them. But Zach, I'll toss it down to you.
Yeah, that's a really good point. I would love to know when this deal was signed and when it was announced, and whether or not all that kerfuffle over that state securities regulators was in between those two dates, because I think that's really interesting. I will say that, just like the sports tie-ups are becoming really quite notable. I mean, you had the top NFL pick sign a deal with Blockfolio, which is now FTX, which also paid him in crypto. I mean, you have all sorts of people who are learning this. And, you talk to managers of athletes, and I was speaking to one, and he's like, a big part of my job is informing these guys that, think of your money as employees, right? You got to put those employees to work. And I think crypto is a key avenue for them to sort of make that statement clear to them, because, hey, these are assets that might appreciate in value over time. And to Will's point, it's a way to think about sort of financial planning in a way that's more tangible to basically young guys who are coming straight out of college and getting their books in order for the first time. So it's interesting to see this happen, I think, again, with a prominent pick. But I'll toss it to you, Jen.
I think the basketball community has created such a community around crypto, and I think it started with NBA Top Shot. I mean, we heard Danny Green on First Mover a few months ago say that they all talk about it with each other in the change room. They're educating each other. There was a story in ESPN that said that they're buying each other's clips as NFTs on NBA Top Shot. So it feels like they've created this real community around crypto in basketball, and I think that's really cool. I was going to throw it to Naomi to get her involved. Okay, fine. Let's hear it, Ben.
Counterpoint, it was Spencer Dinwiddie who started this. It wasn't Topps, but Zach, in terms of putting money to work, my sad thought there was just oh no, we're all just middle managers now. That was my thought about it. So
is change room Canadian for locker room?
Yeah.
I think that was a Canadian.
Wait,
I think
what?
we heard some Canadian.
I got it.
Yeah. You got it, right? Naomi.
Yeah, of course I got it. I'm part of the Commonwealth. Mm-hmm. Yeah. Will, exactly. I saw your hand go up though.
No, that was my only thought. I was just clarifying. I was confused.
Naomi, I was going to ask you.
When hockey, Jen.
Honestly, when hockey. I was going to ask you, Naomi, we're seeing all of these huge crypto brands partner with massive names in sports and teams, and we're not hearing about the brands that we're used to seeing. Like, I mean, they're all still out there, but these big splashes are happening in the media. Like, is this what signals ultimate mainstream adoption when BLOCKFI can do this and it's not Nike offering a deal like this?
I think that we've been in mainstream adoption for a while now. The fact that there are so many institutional players diving in, that we have so many celebrities talking about this, we have people accepting their paychecks in Bitcoin, we have people selling JPEGs for just astronomical amounts of celebrities getting involved with that. Like, we're here. This is mainstream adoption, most prominently signaled by the amount of regulatory scrutiny that we're now getting in the industry. That's clearly, going mainstream when the government starts to really, inspect this deeply. But we'll see what this goes there. I believe in the decentralization of this movement, moving away from a lot of company structures to a more decentralized setup as a response to this regulation. But let's wrap it up there. Zach, take us home.
Let's decentralize to the weekend, gang. That's a Good Friday show. Thanks so much for sticking with us. It's The Hash. We talk about the latest in crypto news, why it matters, and what's next on the horizon. I'm Zach Seward. We got Naomi Brockwell. Hold on, I'm going to try to point right. We got...
You're going to do such a
Will
bad job.
Foxley.
Jen
Nasty.
Wow.
Hold on. And Ben Powers.
That's like the most
down there.
old man thing I've ever seen, Zach.
Thank you.
That was awkward.
Well, let's decentralize,
yes.
but SEC
Yes.
don't come for my weekend.
Yes. All right, gang. Stick with us. We'll be back Monday to talk about more. But until then, have a great weekend, and thanks so much. Bye.
Bye.